Hi, I'm Jyoti Rai. Today I'm host to a very interesting conversation, something that has never been before in a format that we are seeing today. A series thoughtfully curated, keeping senior leaders of Indian capital markets right at the center. And this dialogue is taking place at NSE facilities with nobody else but the MD CEO of National Stock Exchange, Sri Ashish Chauhan, a, a leader that is known to move markets, move infrastructure, in fact, scale it up today to a level that India is in top 10 markets globally as far as the capital market volumes are concerned or overall reforms are. Today, Ashish will be with us discussing some nuances of leadership in a very unplugged, candid version of his, which will be talking to you. And I have the job of asking the questions. And I hope that I'll do my job well. Thank you, Ashish, for coming on this interview. And how are you doing?
Thank you. Doing well.
Great. Ashish, when we were doing research and pooling in questions, that if you were the one wanting to see Ashish in a very different format, we were hit by very interesting areas that I believe the youngsters, as we say, the Gen Zs, the youth who wants to listen from the capital leader such as you. Ashish, when we were researching, of course, you are a rare leader, rare as I said in one of my launches, as rare as ethics in AI. A rare leader that you are. You have a very rare vintage view to a lot of things, but we'll be speaking on capital markets, Indian capital markets. So vintage view beaming in today. My first question to you is, you have seen the coming of age of the markets and you have been at the infrastructure side that enables the participants from ban-entry to cry-out model to HFTs and making BSE under your leadership world's fastest exchange. And now NSE, when you came in, Nifty touched 20,000. What the leader in you, while shepherding such a exchange that world looks up to, how has been your journey in this 35 years of rare experience under your belt?
Thank you. See, basically, our job is more of facilities provider and umpires. So, in a way, when a capital formation happens or a growth of a society happens, naturally, the stock markets are at the center of any capitalist society, even a quasi-capitalist society. But broadly speaking, we are what I call backroom boys. We don't come in the front, nor we have too much at stake. We are just providing facilities and running those infrastructures in different parts of the ecosystem on a continual basis. And usually, we are not known as much as people who actually make money or industrialists who also list their companies, and those are the people who create the capitalist system. We are the people who basically keep it running in terms of all the different parts that have to come together. So it's almost 35 years, and as you rightly said, I have seen from physical systems to floors to automation, and now algorithms and high frequency trading and everything. And in some ways, it's also about the way the technology evolved. Any society would end up implementing a particular type of technology. Some societies will adapt early, some societies will go slightly slow, but effectively, if some other exchange in the world becomes successful using that technology, other people will have to adapt. And that's how I don't see the advent of technology taking over the operations of the infrastructure of capital markets as a kind of something very unique to India. But India was unique in a sense that India adapted very early. India was the first country in the world to have order matching system successful. America had more computers in early 90s. They also had screen where people could see the orders or quotes and trade on, but trading on phone, not on screen. That used to be NASDAQ. Floor used to be New York Stock Exchange, and people had tried computerization before in, say, London Stock Exchange. There was a system called Taurus in late 80s, and that spent a kind of I think, £1 billion or something in those days. And when it launched, it did not become successful. And so when post Arshad Mehta scam, NSE was set up, and it went on with an idea of having no physical floor, but entire country as a floor, and screen-based order matching system. Nobody gave it a chance. In fact, it was being set up by bankers who were almost bureaucrats. They were PSU bankers, and nobody gave it a chance. None of us were technologists either, and so of course none of us were from the markets, and so everyone thought this is like a thing where government wants to show something being done, but it cannot become successful. And so in that context, because there were very low expectations from us, we had probably less pressure.
Right.
And that's how we could experiment and do things. And then once it started, then lots of issues started coming up on runtime, and we had to resolve them. And fortunately, we were successful in resolving many of those issues in sequence in a very short time. And that's where I think Indian markets took stride compared to the rest of the world. The rest of the world followed, of course, because it was glaring success, and so everyone became automated later on. But I think the contribution of NSE in India's capital markets has been immense. There is no doubt about it. It brought the much needed trust that is required, the consistency, the risk management, but also on the other side, it brought in the IT into the mainstream. I mean, a person sitting in Jorhat or Dibrugarh or Coimbatore or Salem could trade using a satellite telecom terminal, small, what we used to call VSAT, and get a response and a trade in less than 2 seconds anywhere in India. It was unheard of. It looked like a sci-fi movie playing out in middle of Sahara Desert. And so in late 90s or late 1994 or early 95, there was nobody could have thought, because India did not have too many computers, and even telephone lines would take 5 years to be allocated to and come to your home. And in that context, something got set up which was world beating, way beyond anyone in the developed markets could even imagine. And that, I think, created a wave of setting up public digital infrastructure. NSE was the first public digital infrastructure of India, but it was also the first large IT project which was in public, and became successful, and that gave so much confidence to Indian IT companies. I recall many of those Indian IT companies used to bring their potential customers to NSE to show that India can do it, and that's how they got those contracts in US and Europe and all. And that's how, when Y2K came, India was able to create so many engineers and send them abroad and solve that problem. And later on, of course, we used IT in myriad of ways, but largely, more importantly, in e-governance, payments, sending direct benefits to people. I think even Aadhaar, the originator of all that, in some ways was NSE in a very stark way.
Thanks, Ashish, for bringing so many elements in your response. You spoke about, and like the industry knows you, humble you, and industry also knows Ashish as a monk in markets. Ashish is leader to, of course, he's a leader of a largest stock exchange here, but Ashish is also known as a prophecy in himself. His philosophies, and as You rightly said, or you are very humble, so you won't ever take credit of anything. So you called yourself and like of yours as a back office or a back end. And while पैसे your exchange is a platform जहाँ पे लोग पैसे बनाते हैं, हमारा बना नहीं हुआ, but आशीष आपने इज्जत बहुत कमाई है, and industry really looks up to you. Not just India, I think globally is the same story. Ashish, picking up from the point of trust, I remember you mentioning that each time in the last 35 years, while the world has seen dematerialization process, world have seen faster trading, prices coming on screen, and you sharing your experience how the few second settlement opened and popped up eyes that aisa bhi ho sakta hai. You have seen technology advancement, and you also mentioned there was reason of revisiting these product gaps, technology gaps, risk management gaps. Uh, and each time you identified, the industry identified, you went on to fill these gaps with creating a depository body, a bank for stocks, as you mentioned. You created you were, I believe you were instrumental in also bringing the clearing corporation aspect into more organized way. I think then it warmed up, the whole industry just took up that as a mandate to fill up the infrastructure gaps. The question, Ashish, here is that all of this requires a lot of all of this went on to happen because of the transparency that was to be brought in, adding a lot of trust back to the investor. And uh, so we reached where we reached by identifying these elements कि trust चाहिए तो transparency लाएंगे, speed चाहिए तो technology लाएंगे. Next decade, what do you think are the gaps that NSE under your leadership has identified, or you have identified for the market as a whole, that you will be working on filling up these gaps for the market participants?
See, the basic purpose of running a market is not running the market for itself, right? It is a social purpose, and that purpose is to manufacture trust in people who invest vis-a-vis the people who need that investment, that is the companies. Right. So it's actually there are two types of financing mechanisms that happen in the world. One is called intermediation, where you put in your money into an entity, and that entity is your principal kind of borrower, and then on the other side they may lend it to somebody else, and if that party gives back the money or with returns, they will give you some interest.
Right.
And even if that party doesn't give that money back, they have to still give you with interest. That kind of mechanism is called intermediation.
Right.
Usually banks, NBFCs, they are the intermediaries. They collect money from you, on lend to somebody, but even if the other party doesn't give back the money, they still make it good.
Yeah.
Right? And of course, they don't do it by magic. They have ability to charge more interest, they give you less interest, and so the margins is what is used for operations, and also in case defaults happen, stuff like that. And so the banking is one way. The other side is what we call disintermediation, where a person invests money directly into something else, some economic activity, by way of giving debt, which is called bonds, or by way of becoming a part owner, which is called stock or shares.
Okay.
And so there are two fundamental types of activities in finance: the intermediation, the disintermediation, right? And broadly speaking, the stock markets allow disintermediation. They are platforms for people to transact. That is, a buyer of a share is actually buying an economic stake, a small little part or share in the future profits of the company, and that's why it's called share. But basically, it's once that person buys and the share goes in her name, then the relationship is between the company and the person who is buying it.
Right.
And of course, the exchange also tries to bring more information from the company on a periodic basis or on a material event basis and things like that. But eventually, the trust has to be between the company and the investor. What we do as platforms are allowing one side the execution of transactions, that is buying or selling of shares, but that is for me a very small part, although very a glamorous, very exciting part of life, which is basically transactions or transaction processing. But the larger part is basically about the company having a relationship of trust with the investor.
Right.
And that will last long, literally till the time company lasts. And that's where it's almost like you want to buy a car and you fill in the form and pay the money. So that is the transaction processing part of it. And when car comes to you, and then how you ride with it and how often it fails and how good the ride is and all, that's between you and the manufacturer, right? So what we do is largely the first part of it, which is the transaction processing. And the second part is where the companies have to give us information so that you as a small investor sitting anywhere in India or in the world is able to assess what that company is doing and whether current price is justifiable or not. So that's broadly what the exchanges do. And in somewhere that trust, what we need to do is, or what we need to create, or as a society we need to create, is basically literally millions of shareholders. Today, after 30 years of existence, when NSE started, we had probably, India had around 20 lakh or 2 million investors. Today we have like 9 crore investors registered uniquely, unique PAN number based shareholders registered with NSE. So literally 45 times more. But more importantly, they are also the largest cohort of any type now in the country, almost competing or better than all the farmers put together in India.
Well said.
And the wealth that it represents now is close to $4.8 trillion, which is almost 35-40% of all wealth in India, right? So that trust of investors investing, small little investors putting in money into companies, they probably never visit in terms of their headquarters or how they manage. But the person has a trust in India's judiciary, India's parliament, India's lawmakers, India's Ministry of Finance or bureaucracy or SEBI, that is our regulator, exchanges. But more importantly, they have trust in India's entrepreneurs, right? And that trust requires step-by-step approach of creating that. There is another economic philosophy. Rightly, wrongly, there is a perception that poor people per capita GDP having poor countries cannot have vibrant markets, because how can poor people save? And if they save, they don't trust even their brothers. They won't trust any third person sitting in some another city very far off to take that money and make a profit for you and then share with you. It's like a fairy tale, right?
True that.
So while as in developed markets, very rich markets, people are able to trust each other and they have social systems to control all this, and that's why they have better markets and better trust. And countries like India with very low per capita income GDP, you are not supposed to have it, right? And 30 years, 1994 NSE started, and like 2024 now we are sitting, we are now fourth largest market in terms of the market capitalization after US, China and Japan. And we have belied the economic theories literally, and more people are investing in the businesses of more and more other people, right? It's a very interesting where Indians are becoming very trustful of their entrepreneurs, right? And that is, I think, that trust is so much more important for India's future, right? And it has been achieved not in one stroke. Of course, it has helped that India has a stock market history of almost 150 years. BSE was set up in 1875, and the next year we will celebrate the 150th year of official setting up of BSE, although the trading started probably in 1820s, 1830s. But in terms of the official setting up of an exchange, it will be 150 years. So that tradition of some people trusting some entrepreneurs started early. There has been many mishaps, many companies going down. But overall, I think last 30 years I've seen the advent of a new regulator, sectoral regulator. It was the first new sectoral regulator set up in, I think, 89. or 88, SEBI. It got its power, I think, in 92. And so setting up of the regulator was a seminal moment in India's capital markets history. And setting up of NSE was subsequent, but again, they worked in tandem to create that trust, and they continue to evolve jointly together also as a regulator and a kind of frontline regulator or a
very
regulated
active
entity also.
Yeah.
And so it has been a very interesting journey for India's markets. But overall, put together, what they have done is to enhance that trust in India's entrepreneurs and by the investors by creating slightly more fine-tuned ability to collect information from the companies on periodic basis, on a specific time basis, and provide it to markets at pretty much zero cost. Today, if you look at world markets, most of the European markets, US, Japan, Australia, their largest revenues of those markets or marketplaces come from selling data. And you and me cannot get data easily, and it is like very costly to get real-time data from exchanges. But in India, the regulator made it free from day one for all investors, not only for brokers, right? And so that has been so much more important for creating that awareness and also information reaching the investor. The smallest investor also gets the information the same time as the richest investor gets. And so in a way, it has democratized investments. People don't feel that they're getting slower information or inferior information. I think those kind of trust acts by the regulator have taken the Indian markets as a long way and have become kind of flag bearers for the rest of the world.
I think every answer of yours, Ashish, is opening up 5 more different areas of us to deep dive in. But you heard Ashish, it's about trust and policy makers, Government of India, I think all together have been putting the right infrastructure, policy, initiative, working groups, advocacy groups that can build up trust in the system, continue to maintain that. And I think it's the culmination of all of that. And Ashish, you were called in to chair Shepherd NSE. As the industry and as we read, there was a trust deficit that took place. And you were shepherding BSC so well. You were the leader of the leaders, transforming BSC. In fact, the very reason that the BSC took a back seat when NSE came in, because NSE addressed the technology very, very well. They took technology to the investors, and when you were in BSC, you made the BSC the fastest exchange in the world. You were brought in by policymakers, Government of India, and you carried that trust on your shoulder. Of course, today as we sit here, it was a right decision because they brought in the right man, which is you. What was in Ashish's mind that time? How were you
In
felt?
2022, early 2022, there were sort of new and sometimes unbelievable allegations or sort of revelations in the regulatory orders that came about on NSE. And in some ways, as you rightly said, the trust was coming down, and people actually went to jail too, right? So from who were running NSE earlier. And so it was a very tough time for NSE's employees, and also overall Indian capital markets, because ultimately, even if you are a venue for building trust, you need to generate trust in your self also, right? And that's where basically that trust deficit was very acute. And I was retiring from my job in BSE because there is a regulation by which a CEO cannot be there for more than 2 terms each. And so I was completing my second term almost at the same time. And so I was retiring, and I would have gone into retirement happily. but then this NSE sort of CEO position came about, and I was selected. My family was naturally against it because they thought there's a
It's a high
huge,
pressure. It's a
yeah, huge
huge.
pressure with potential sort of difficulties.
Yeah.
And at that stage in life, or at that age in life, you don't want to risk because
Yeah.
of the health issues which you may incur because of the high pressure, or your reasonable sort of what I call a kitty in your bank balance to retire rather than
Shanti
taking up,
se.
yeah,
Yeah.
rather than taking up such issues. But then somebody had to do it, and in some ways I was selected. So I had to. My sister had called up from US saying, "Don't even apply," and my wife was against it, my child was against it. So in a way, it was more to do with you got selected to put right something which you had made yourself with your own hands in early days, and so uh, you also take it as a responsibility on yourself, and that's how almost it's 2 years since I joined back NSE.
Yeah.
I left NSE in 2000 and I joined in 2022.
Yeah.
So,
It's a circle
but
of
it has been,
life.
yeah, and
Yeah.
for me, it was tough, but broadly, all the issues that were coming out, at least in the day-to-day operations, we don't have those issues, and I think broadly, that trust deficit you said now has
Is
broadly
yes,
gone.
it's
Right? So,
quite stable. NSE is back in radar, roaring. The number speaks for itself. The advancements, the noise we hear on NSE's block. Number of IPOs getting listed on your floor. Somebody was saying this gong is gonna be literally non-stoppable from Monday to Friday. Such is the buzz. Such is the support coming in from NSE to the market participants. So, Ashish, I would like to say this, that probably this is the role that you're doing in national interest, because nation is, we need these leaders who can stabilize things for us, give us a reason to have trust back, and your leadership has truly transformed this entire imaginary that had happened, and we literally lost out several notches because of the setback. The so uh, of course, there is a rumor that is in the market that after NSE, BSE, and back to NSE, being called back to NSE, probably you could be called to NYSE tomorrow that yahan theek nahi chal raha hai, please come and handle the ropes. So do you think like
no, they
that?
are doing well, and I
Yeah.
mean, I have not worked outside. I teach abroad
Yes.
in few countries, but I have not worked abroad, and I have no intention to work abroad
No,
in
any
future. So broadly speaking, this in a way this was a call that came, and somebody had to sort of take the baton and
I
run
think
with it.
this.
So that's how I see it. Otherwise, I mean, this is the country uh, we have all worked for, and we
Right.
want it
Right.
to shine. And I think our time is coming.
I think this is one of the best decisions which we as a market participant felt, that the policymakers and government of India has done very well, because if not you, who? And I think the leadership left no question in anybody's mind that if someone can fix it, it's probably you. So against the wishes of your family, you are doing what you do. And I remember my dad saying, "Fauji is a Fauji. A family member later होते हैं हम लोग, first of all at the border." Ashish, I'm very tempted to ask this question, and I'm sorry if it would have come to you many times earlier also, but I cannot not ask you. There were certain stacks that made development easy, and a lot of these stacks, like market, speaking of market efficiency, came in with understanding of technology with speed. Investor protection came in because the basis of SEBI setting up was to protect the retail investor, like you said, not the rich or this thing, the retail investor. Product innovation also added was a vector for growth for the exchanges. When these stacks are were set up earlier, and we were the beneficiary of the, the derivatives came in, and we had with F&O happening, we had SIP, as you call it, was a product innovation to make it easily acceptable. We are far more wiser than we were before as a regulator, as a platform, as a market infrastructure. What are the elements today the exchanges under your leadership or can use as far as technology is concerned to harness the best for risk and governance reasons so that the trust remains intact? Uh, can you share some of the things that you think the technology can bring to risk and governance area?
See, the process of transaction completion,
Right.
by the time you think to you actually complete, you pay the money to buy and get the security in your name, or say derivatives get settled. There are so many agencies come into play, so many different types of intermediaries come into play, so much of technology, but all of them have to talk to each other in a coordinated fashion and very quick, because the response times here are in microseconds, right? In a second, there are a million microseconds. So here, everything has to work like clockwork, and all the agencies, and each agency changes anything, everyone else has to change, all brokers.
It's quite in sync, as the technology of all the market participants are quite in sync, and any tweaking anywhere has to be run past through.
And also everyone has to do that, right? So it's a very delicate equilibrium that gets created, but it's very sort of very unstable equilibrium, because changes keep on happening, and so everyone has to change, and then next change and next change, and so in some ways you have to ensure that you continue to provide best services without any interruption to all the market participants. But change is a way of life, right? So you continue to do that, and it's not the technology of one type which can be miraculous technology, right? Because technology over last 40, 50 years, especially information technology, has grown immensely in different directions. And if you think your job is to provide completion of transactions or transaction processing and manufacturing of trust, that is getting information, providing to each other, how do you best do it using available technology, right? So when there were no telephones, we started using VSAT or satellite telecom network, so that you don't require a physical lines into people's houses or people's offices. And so each time a new technology became available, we had to think through and incorporate that into our scheme of things. So we started with, say, computers, that PCs were very new in those days, and that connected to the satellite telecom. And then outside your house, it will be 1.8 meter diameter, that is 5.4 feet diameter antenna, beaming into INSET 2A or 2C, and then it'll come to the NSE's headquarters, and then it'll do all the matching and then send you back the information. From there, when internet started becoming more popular, we had to allow people to do transactions through internet. And so that also kind of had to be done in a way that it is not unfair to somebody, right? And neither any every vendor had to be given a chance, every broker had to be given a chance, it had to be affordable. And technology in those days were very unaffordable. From developing country,
VSAT itself must be such a
right. So from a developing country standpoint, it was very costly. I recall somebody had come from Malaysia recently, and I was chatting with her, and Malaysia almost 98 or 99 bought software from another country for their commodity called cloth, and it was like extremely costly. But to connect the back office of brokers was also so costly that the exchange and its participants became bankrupt paying for those softwares and hardware and all.
Oh my God.
And so we had to do very appropriate, implement appropriate technologies, and that has been our hallmark as a entire system. That whatever we do, we think through all exchanges, regulator, and everyone. We think through and figure out that it has to be the lowest cost, but the best response time, based scale, and things like that. And in some ways, India has been fortunate to have such great engineers who can give us that kind of technology at a fraction of a cost of what you will get in other countries, including in developed countries.
Right.
And that's what you can see what has sustained that level of innovations and level of changes is because the Indians inherently have adapted to technology like fish to the water, and so many people have contributed in ensuring that setting up of exchanges and then depositories and then this clearing corporations and real-time risk management and margining and banking and collateral management and literally and then the internet-based trading and then derivatives and then equities derivatives and currencies and commodities and then mobile-based trading.
Right.
And all, I mean, every time we changed, naturally the number of people participating in the market went up many times.
Right.
But the facilities available to them also increased quite a lot, and their cost for a transaction came down substantially each time.
Right.
And the overall strength of the market also improved. So overall, I think justifiably we should be proud as a society that we have one of the most highly regulated markets, which is able to create that trust.
Right.
And all the attempts, whether we use new technologies or not, naturally you need to use it, because if you don't, what happens is you remain behind compared to the rest of the world, and people may exploit the gaps that open up. So you might be the best technology country in the capital markets since 1994, but if you don't evolve very rapidly the way the world is evolving, then by 2024 you are like obsolete, right? And so, and the gaps open up, the unscrupulous people exploit those gaps on all sorts of directions, and that's why you have to be kind of few steps ahead or almost the same time as the world is evolving in newer technologies. So that, and you need to take calls on technology. Sometimes you are wrong, but you can't be sitting, saying, okay, let the world go through the cycle and then whatever technology is successful will adapt, because then you will always be a follower, and many times you may lose out on opportunities. So, I mean, I recall some of the technology calls we had made were correct at that point in time, but in retrospect, there were better technologies that came about, and we had to change. It took up some time, but you have to make decisions, right? And that is where, and we have to make collective decisions. It's not that only one institution or one individual makes decisions, because these are all connected entities and real-time connected. So, like we have 1,300 plus brokers, to depositories, to exchanges, to clearing corporations, SEBI, several hundred banks, and so and several thousand depository participants, custodians, foreign institutional investors, and literally 9 crore overall investors, right? So all of them are connected, and everyone has to evolve very rapidly. And if any one of them gets hacked, like on their mobile also, even individual getting hacked is a too much thing, right? So you can't have anyone doing anything wrong or being left behind. And so that's the onus on the innovators, that it's a curse on the innovators that they have to continue to run on the treadmill faster and faster.
Totally. I think, Ashish, you have very interestingly injected this point, because this is exactly what is happening on the other side of the cyber security. Ashish, this question is to do with the education and attempt to understand markets for a student or a youngster who is looking for career in financial markets. The straight cookie cutter jacket that is available through management colleges and various other colleges is giving them a direction of jobs at a very different level. I'm coming at a managerial level, at an ops level, and stuff like that. But I have seen an interest of, especially youngsters, even students, to pick up profession in financial markets, and they find trading investment very cool. You also said glamorous side of listed equity. So what is your message to these youngsters, and I'm talking about students as young as 7th, 8th graders, who are asking fundamental directions for how do I start career in trading and investments?
Yeah, I think in some ways, as a society, we need to figure out that the trading aspect usually doesn't add much value to the society, right? So effectively, how many intermediaries the society needs is a question which gets asked fundamentally. But more importantly, I think every person in any society should have ability to transact with others in a commercial way. That's what we call financialization. Earlier, people used to do barter, and India had very little financialization done because for very long, and that's where when automation came in and we had a base available in the Aadhaar and mobile available with many people. Jandan Aadhaar mobile scheme was so successful. Now I think more than 60 crore
Yes.
accounts are there, and pretty much every household has one or two bank accounts, which was not, I mean, the bank account penetration used to be very low, and probably 25 years we were chatting about financial inclusion and we couldn't do much because somehow we were going wrong way, or technology was not mature, or we had not figured the technology. And then when this Jandan Aadhaar mobile came, it was like a roaring success, right? And that allowed you to put direct benefit transfer and everything. So one is basically once you come into the formal finance, which includes a transaction processing with anyone, including sending money to your child sitting in another place, say 50 rupees you want to send him for coming in a auto rickshaw. You can send him on a mobile today, which was impossible. I mean, it was looking like a sci-fi fantasy even 10 years back, right? Today, it's so much more doable and everyone does it. I mean, even in the remotest village, right? So that's where, for me, the technology's evolution will continue. But when you apply it into the side of finance, first and foremost, I think every individual has a responsibility to understand finance. Because whatever work we do or we don't do, many people don't want to participate in work, right? But still everyone has some connect to money, right? Because modern life requires money. We need to manage. So we need to basically train or at least have a way for people to learn how to plan their budgets, how to spend, how to borrow, how to save, where to save, what kind of risks to take. And in each of these aspects, what are the risks involved, right? And so if we can train our people, the youngest to the oldest, it's not necessary that 80-year-old doesn't require this knowledge, right? And so we need to basically, now that we have reached the stage where we have a lot of formalization of finance, everyone is in the formal finance scheme of things. Now, how do we teach that? And that would include any mechanism through self-help groups with women or schools or colleges. A little bit of understanding will go a long way. What are the type of instruments available? Life insurance, how does it differ from, say, health insurance?
Right.
Or what kind of insurance at what age you would require, and whether it is correct or appropriately sold to you or not. What are your responsibilities? And things like that. So you can start with a young child, even in, I mean, I have done it in my previous job also. We created some games, board games, not even computerized games, but board games where you do this snake and ladder, and in that the snake is sort of going to eat you up and bring you down if you don't pay your life insurance premium in time.
Wow.
So that kid
Yeah.
at age 4, 5 gets a perspective that I need to.
वरना सांप काट देगा.
So नहीं, and plus आप नीचे आ जाओगे.
नीचे भी आ
So
जाओगे.
that is where basically for me we need to have general financial literacy across, and better we started in schools and college, and we are acutely aware that in schools we are trying to put too much of curriculum. So how do we make learning of this basics of finance fun? You can make it very tedious, and children can run away, or even adults can run away, even if it is important. Other ways to make it real fun, and little, not in bite-sized activities, so that they don't get tired. So literally with NCERT and many of the state governments from literally class 5, 6, we are trying to introduce, say, one chapter each, not as a finance subject, but as a story on what happened to that person who didn't do this or who didn't do that. And what happens is then when that child grows up, has some basic concept of an insurance or a fixed deposit, or how to take care of your password on the mobile payments. And those are the kind of things we are trying to work with the government. But that is as far as what I call financial literacy is concerned, and everyone requires. There is no way. Plus, the way the new instruments change, even the way the technology is changing in the same instrument, it is possible that what was secure yesterday is not secure today. So everyone has to learn newer things to protect themselves, right?
Totally.
And in some ways, that will be a continual process for people, because of the speed of change. And many of these players who do this bad activities are not even visible to us or sitting in India. They might be sitting outside of the Indian sort of jurisdiction, and we may not be able to catch them. That's why it's important for everyone, even at individual level, to be very, very cautious with their passwords, and also learn newer ways of how people cheat you and how, because there is no physical work, right? If you had a wallet, you take care of it and it falls and it goes away, and there are physicality to it, so it's easy to learn. But in these logical things which have now overtaken our lives, how do we train our people intuitively and easily, and also keep them updated with the newer things is, I think, a larger issue. Coming to people selecting career in finance, there are many types of careers, right? Trading, again, is a very exciting thing, but that is actually a very small part of overall things, right? There are back office jobs, there are advisory jobs, there are planning jobs, there are estimating jobs, and so many jobs in finance, which even just calling up people of paying their insurance premium on time, or taking them through on a health insurance, taking them through a hospital or a clinic to get their blood sample is also a job, right?
Totally.
And so many jobs are available to people, and from what I call low paying to very high paying, low skill to very high skill, but they are all now extremely automated. So I think the minimum requirement for a child to think of a career in any type of these activities is basically to have some IT literacy available to them, and then whatever interests them in terms of which some of them are very fast moving, so they attract you more, but some of them are more money making, which may not be sort of known to you. And that's where you need to, when you make a career choice, you need to also figure out whether it's your aptitude, because we have seen many people who trade fast on screens, they get burnt out in 5, 6 years, 10 years. And so whether you are sort of adapted, do you have aptitude to take that kind of stress, that kind of screen time, and also fast activities, because otherwise you can literally have, you might have worked for 10 years, you might work for 10 years, and then in 11th year you might think, now for rest of my life, what do I do? So that's where, of course, the way I look at it is, people can learn newer techniques, skills, technologies, because technology changes are going to be immense.
Right.
And so if you learn newer, I mean, any activity, you can learn an adjacent activity also later on.
Wow.
And that's why Indian youth have to basically figure out which area they want. They want to be in algorithm trading, they want to be in manual trading, they want to be in back offices, they are in wanting to be bankers and risk management or providing funding
Right.
and things like that. So there are so many opportunities that are available, and any country which uh, has reasonable formal finance and will have probably 1 or 2% of its population engaged as employees or as workmen in the field of finance, right? Not more, because finance in a way is a value addition happens somewhere else. Finance is actually helping savers to move the money to the people who require it, and of course get the returns back and give it to the people who save. So that's broadly the basic function of finance. But then how fast it's able to do it, or how well, how risk managed, that's where all these new skills like derivatives and even actuarial framework in, say, insurance, or foreign exchange trading, or just trade financing, and so many more things are available, and nobody can claim to be an expert in all these areas, because now there are literally at least tens of thousands of job specifications available in finance itself, right? So everyone has to figure out. It's easy to start in equities market. That is a good start, but don't limit yourselves only to becoming traders in equities, or be investors. Usually, investment is what gets you returns. Trading usually is going to keep you busy, but may not yield you much results unless you want to be professional traders, and for long, because it may burn you out, right? And also that's where basically it's important to learn first how these traders trade, how do they pace themselves, how do they use new technologies, and keep themselves engaged with rest of the world, because it's easy to also get sort of enamored of your models and get stuck with it. So for me, I would request people, I mean, especially youngsters from class, you said 5th or 6th onwards,
Eighth
right?
and ninth,
To even students who are in colleges. Like today, we are having tie-up with several state governments, where we take college students to through 40, 50, even 100, 200 hours courses, take them through various examinations, which National Institute of Securities Markets actually provides, so that they get licenses too. But they also get basic training, and we make them connect to professionalism in those fields, and make them sort of worthy of becoming entrepreneurs themselves. So like just now we did one tie with government of Uttarakhand, where almost, I think, more than 15% of the college going kids would be trained over next 1 year on not only basics of finance, but also in NISM's more advanced activities. And then if they pass those exams, then more advanced activities. And some of the mutual funds and some of the brokers have also joined hands to give jobs to those people if they don't want to become entrepreneurs. So those are the things which need to be done, because formal training in any work you do is a must. Sometimes you become expert at things by doing, but if you have had a formal training, I think you would be better sort of person, better entrepreneur in that activity.
Fantastic. I think Ashish's message to all the youngsters out there, and the ones in 8th, 9th, 10th grade wanting to understand and learn about trading and markets, I think irrespective of age and class that you are, education in financial markets, education in saving and investments is going to be your toolkit for wealth creation going forward. And you just heard Ashish that don't get enamored by the returns and get carried away that trading may talent is for trading. Harness yourself, learn everything possible, add that knowledge for become much smarter investor. And yes, Indian financial market, the capital market, as you heard Ashish, has a spread of opportunities, roles that are that exist, and but it all starts with understanding, getting your fundas and facts right, and NISM has courses, check it out so that you can evolve your understanding on capital markets and make better choices for jobs ahead. Ashish, for a file felt, now this is a question which is, uh, can you read blindfolded, can you read through this? I am asking you because each time I had to change a flip because there was there couple of words, not one, but you took them in your answers, and you spoke about skills. Yeah, and we just finished. So, can you read first of all? Can you read it? What's written? Because I think you can read. There's a special power that you have, and it's happened multiple times. So. You spoke about talent, Ashish. You spoke about education and independent of age and all, and you spoke about skills briefly. Uh, and yes, this is an NISM initiative, which is to zoom in onto capital market, and then zoom out to say where we all started. Now, next, what is next lined up? So, as a platform of education, getting the talent meet the right, resources of information and courses. Um, the skills, as they say, are not taught in the four walls of the school. The real education sometimes is outside. In your journey, or I'm sure आपके भी काफ़ी skills थे जो which came to to your assistance and help. जहाँ पे youngsters इतने education courses के पीछे में degree पे degree ले रहे हैं, what is your message to them listening to you, um, that skills, the skills required to be future ready, and what are those skills and how can one get it?
Fundamentally, today the technology is changing so fast that in my sort of generation, we would probably learn for 25 years of our lives, first 25 years, and then use the whatever we learned for next 50 years of our lives to.
Yeah.
And broadly, we could run with one skill and then keep on improving on that over a period. But broadly, we could have our life reasonably taken care if we were good in one skill, right? The fact is that the last few years have seen the technology change so much, and the waves of technology are coming so fast that most people will have to sort of unlearn what they learned every 5-10 years and learn newer techniques, technologies, even the smartest people.
So unlearning is a new skill.
Is also a skill, and learning newer things,
Newer
because
things.
sometimes we think I cannot learn at say age 30. I have learned whatever I had to at 25, and you might be a gold medalist in your class at say age 22. But if you don't add value to yourself every day in the chosen field or even your hobby fields or other fields, slowly you become irrelevant because the world is changing so fast. And many times, even if you try to keep pace, the world may overwhelm you with the changes, right? So you need to go back to schools. It doesn't have to be physical schools. It can be through e-learning or NISM modules or whatever. But basically, for me, everyone has to continue to upgrade, just to stay on the treadmill. But if you want to do something good with your life, you'll have to also understand that technology trends, the way it's affecting your industry, like finance. So many people who used to be on, say, floor traders, they used to be the biggest floor traders, and they had a great voice and sort of presentation and physic. In 94, this screen-based trading came, and all those guys who used to make millions
Yeah.
became nobodies, right? And even old, frail people became important. I recall when we started NSE, November 3, 94, it was in Mahindra Towers in Mumbai, near TV Tower in Worli. And so we had put some 100 terminals, and one of the old BSE broker who used to be a floor broker. We used to call them jobbers. One Mr. R.D. Shah. So he was like 75 at that time. And he came with one of the boys and he would tell the boy to tell him the price, and he'll say, buy this, sell that. And so that boy did that on the first day, and then second and third and fourth. And so fifth day I asked Mr. Shah, saying, Uncle, you are a legend on the physical floor. Why are you coming here? So he said, son, I have become old. I can't run around. And here, this boy, I ask him, and he tells me what are the price, and I tell him what to buy, what to sell. And I'm able to, sitting here in AC office which you have given me, I'm able to do all this. Why would I go and run around there? At age 75, this is a luxury for me. Otherwise, I would have been thrown out of the floor itself because of the way the physical fitness is required. And so it was a revelation to me that how people can use technology without being adept to use technology. He was just bringing another boy who was sort of able to just learn the new software, and he was using that boy instead of
the relaying the message.
right. So that's how the technology gets used in myriad ways, and you need to adapt. And that person in 1994, at age 75, who had probably not seen computers before, also adapted differently in a very short time. I think we owe it to ourselves, right, to learn newer things, and even older things done in a newer way, right? So that's how I would put it, that nobody's life is going to be easier and simpler like our lives were, although they were not that easy. But broadly, our lives are much easier than compared to people who are, say, age 10 or 20 today. They will have to go through many cycles of technological changes, many cycles of the instrument changes, the regulations changes in the industries they work, and finance is ever evolving. So it's going to change very rapidly, and everyone wants to work in finance. It's a one word, but it has like millions of things, and on all of them there is huge amount of compliance. There are compliance jobs which are very important, right? And you need to know if you do something wrong, then you are going to be having difficulties, right? So those things is what we need to tell our young people, that it's exciting. World is going to be making a lot of wealth going forward using new technologies. India is going to be a larger wealth creator, but onus is on you to stay in the race, right? And learn newer things, unlearn older things, and keep on evolving yourself.
No, this is a very different answer. I was expecting, different, like typical skill enhancement stuff. But I think that Ashish has made it very loud and clear. The skills to have and to harness, one is to unlearn. The unlearning speed is something that we'll be all watching out for. The second skill, as he mentioned, is to upgrade. Be voracious when it comes to learning new things, and literally we all are on the treadmill in financial market. All of it needs to be wrapped up with a good understanding of compliances as well. So unlearn and learn and develop more insights used. I think that's the message, so to say. This is the skills to be relevant in financial markets going forward. Thank you, Ashish, for that bit. I am going to be asking you few more questions. There are going to be a little fun side to it as well. Kind of a myth buster. But before that, Ashish, a great legacy, phenomenal Indian capital markets growth coming of the age. अगर किसी को कहते हैं, I think this is the real case study out. Indian markets have gone through its highs, lows, just like that. Regulator has also, learned, collaborated, calibrated with market participants, and built up the huge advocacy framework of working with various working groups. Technology, as you rightly mentioned, technology has come a long way, and we are still on our path. The question here is that which are the wonders that we have seen in our markets in the last 35 years? What are the next top 2 or 3 technology advancements you think in Indian capital markets that will unleash the next decade for us? Any top
No,
tech
I'll tell
enhancement or any enhancement that?
I tell you, the issue is technology will evolve, and how does the society adapt it? And so newer and newer technologies will come, or even the same old technology will get itself evolved, and you will continue to adapt. That's how I see. Ultimately, the basic purpose of what we do in finance, especially in markets, is to enhance trust in the society and also entrepreneurs, and provide very low cost, uninterrupted transaction processing, right? So these are the two fundamental functions we perform, and people who perform those functions, there are that function can be divided into like 10,000 small parts, and some portion which people used to perform earlier are no longer required because automation is taken over. Like as I told you about the floor traders, their job has gone, but then literally all me and you can now trade through our mobiles, right? So effectively it's self-service now, right? And so many of these functions required to be performed, but it may not be a human who will be performing it, right? And so and similarly many more changes will come in compliances. So largely the way I look at it is the finance works on technological changes, regulatory changes, taxation changes, and on those kind of things, and of course how the society trusts itself, right? So broadly speaking, this is what I would say, that you will have all sorts of new funky technologies which will come. They are not useful on their own. They may be great technologies, but how do you adapt them to the finance, which is also the financial framework which is already existing. Those technologies which are existing, these technologies will first come in at the periphery, and then they mature, they become trustworthy, then you use them a little more, and then they become further trustworthy, and then you become, because what you are dealing with in finance inherently is something fundamentally different from when you deal with say buying of vegetables, or buying of milk, or even buying of say a mobile phone. There you are basically buying a vegetable to use it, and tomorrow it's not, I mean it's forgotten, right? And you buy say mobile phone, you have to use it for some time, but once you buy, you are not expecting the money to come back to you, right? But when you put money in equities market or a bond market, you are actually taking a leap of faith that after some time that money will either yield you more dividends in the form of equities, profits going up, or a bond giving you interest and principals back, right? So that is the fundamental leap of faith you take in markets, and somehow if you keep on getting that money back, or prices, in a way that profits keep on coming to you, your trust gets enhanced, right? So we need to use those technologies to ensure that your trust is not belied. You get faster information as an investor, better information, better quality information continuously, and whether it is through artificial intelligence, which may help you do analysis, or say what they call blockchain, which may help do something else. But today I don't see too much of an issue of using blockchain, because whatever they are claiming to solve in terms of the workflows are already solved in using traditional information technology. So you are not getting anything extra. When it comes, people will probably use it in day-to-day finance more often. But today, artificial intelligence may allow you to help make decisions better, faster. But it is possible that they may also make your decisions confused.
And with AI, anything is possible.
Right. So that's why I'm saying. So it will be always used at the periphery first, at the margins, in small doses, and then slowly the trust will increase. And if the technology evolves with people's expectations, that's where it will start getting used more and more and more, right? But in our business, the way we run it, what you require is determination. You place an order and it should match in a particular way, right? And you want it to happen a billion out of billion times the same way. It has to be explainable and it has to be exactly that same way. If that thing is, well as any technology which gives me fuzzy answer, sometimes it will match with something else or something, then that technology I can't use in my core trading and things like that. So there are some ways you will use it for, say, giving answers to people's queries, which can be many things, but say matching of trade, in some ways the society expects deterministic answers, and the ones which is fuzzy, that could create confusion, right? So, and may actually give you wrong answers, like what ChatGPT does every now and then. It gives you,
thing just happened recently.
yeah, and it even today you ask ChatGPT about yourself, and it'll come out with some funky answer, which may completely be untrue, and it will still look believable to everyone else who doesn't know you, right? And so that's where you need to be aware, and the society requires one and only one version of truth at the aggregate level, right? And that's why when you use it in certain areas where truth or the correctness of information is important, it's very different from using it for analysis. Then you use your judgment for out of 2-3 answers, you are supposed to make one, and then of course you can use that for different purposes. So there are many technologies that will come from holograms to exoskeleton to a variety of things, right? And people will use it in markets in, again, like a variety of ways, right? So, and some of things which you have not heard of may also be getting used even now, right? And some of them are used for speed, which don't get talked about. Some of them are used for analysis. Some of them are used for giving you more insights. Some of them are used for predicting future. And so it's all kind of up to you how you want to use it, and which kind of technologies come and get plugged in becomes more useful. But our job would be to, whatever technology you use, I have to keep on giving you an uninterrupted service and very good quality version of truth, which the companies give us for providing it to investors on continuous basis.
Ashish, there was one question in the beginning which I missed asking you that time. That was to do with the growth of capital market with regards vis-a-vis number of companies that are listed on stock exchange across both the exchanges, and the amount that goes under our clearing corporations every single day for the settlement. The question is that and the decade, we have been saying this, that the next century belongs to India, and and today we can see that in front of us that it's going to be definitely true. The next decade definitely belongs to us. With this promising future, the capital market is always going to play a very active role. I would definitely want to understand from you the SME IPOs that we are talking about. Do you see that as a way for the most efficient fundraise that capital market has introduced and provided for as a platform for, because you mentioned about startups as well earlier, and capital market access is the most efficient way of accessing funds.
See, in a way, it's an interesting question, that how do small companies raise funds, right? So when they go to banks for debt, then banks will also ask them for equity. That your debt equity ratio has to be, say, 2:1. But and they have plans, and they have, but they don't have the equity, right? So where do they raise the equity? And they go to their friends and their relatives and people they know. They will not give them equity because everyone has other usage, including investing in the markets, right?
Yes.
And so it's a conundrum which every SME owner or a startup sort of entrepreneur faces. And despite whatever we read in newspapers about a lot of people getting funding from venture capitalists or angel funders or private equity people, it is not true. My understanding is probably out of 1,000 people, 1,000 businesses that start, probably 1 or 2 get funded. All others, whether they are worthy of getting funding or not, those people are not so numerous and they don't have that time to go through that, and they have to trust you, and each young business looks very similar that it will fail, right? So to trust you on your business is not that important, I mean, that easy for those people with funds. And so it happened in early 90s that many companies, small companies came to the markets early 1990s. Small companies came to markets, they raised the funds, and after a few years they were not to be seen only. They were called vanishing companies. So both exchanges became very wary of small companies, and they stopped listing those small companies.
Right.
And then in 2009 or 10, there was a lot of pressure on the government to allow young companies to raise funds through stock exchange mechanism. And so government set up a committee. The committee gave its report saying it should be allowed. And then SEBI came out with regulations for SMEs. I think in 2012, first SME started listing on NSE and BSE both. And it was a tough time because people were still very wary of companies which were at a different stage of growth, because when large companies come to the market, they are reasonably secure in their cash flows and their business models, and usually they are profit making, or at least very large. Whereas the young companies have also higher chance of not doing well and probably closing down.
Right.
And so people were very wary, but somehow it started, and today, from 2012, now it's almost 12 years to this day. Literally, it started in March of 2012. And so we have done close to 900 plus companies. We have raised between two exchanges more than 16,000 crores for those companies, and that market capitalization now more than 2,50,000 crores. So effectively, there has been now a track record of this 900 plus companies listed on exchanges, which are what we call SME. They have raised, some of them have raised even 1 crore, some of them have raised 50 crores, but average is close to 16, 17 crores if you take both exchanges put together. NSE raises probably 20, 25 crores per company. BSE probably raises 5, 10 crores. But broadly, that is how it's allowing young businesses to come raise funds if they don't get funded by the angel investors or private equity or venture capitalists. And in some ways, many of them have done well. Some of them have almost 20% have done well to go to even main board on exchanges. And overall returns they have given on an aggregate basis has been much higher than what the main board market companies have given. But it's still what I call early days. Many more entrepreneurs require funds, and I have this theory that capitalism, the way Karl Marx visualized in early 20th century, was a situation where people had to put in a lot of money in a business to make a lot of other money.
Yeah. The capitalism
required capitalists, right?
Capitalists.
And capitalists were supposed to be very rich people. And people who did not have a middle class or a poor person, we did not have money, then you had no chance to become a wealthy person for last literally thousands of years. Because the technology that was required also required a lot of investments in plants and machinery and land and training of people and all. But the modern business, the way the technology waves have come, the modern businesses now don't require too much capital. And there are companies which have put in very little money and they have become multi-billion dollars, hundreds of billion dollars companies, even in America like Google and all.
Oh, yes.
They came out of garages, right? Pretty much. And in India also Infosys and
very modest beginning and a very chit fund kind of like contributing funds.
Right. And so they have become very large because the modern businesses don't require that kind of capital.
Right.
That new wave of companies I call, or new wave of capitalism I call capitalism with very little capital.
Right.
Earlier you required capital with a lot of capital, so nobody had a chance. Today you require little capital, lot of hard work, lot of brains, lot of exposure, lot of markets. And that's what India has in plenty, right? India is starved in capital, but it has a lot of brain power, a lot of people, a big market, and of course the entire world wants to take your services and products, and you can actually scale up very fast the
Right.
newer businesses with very little initial capital, right? So that's where this SME framework, if harnessed well, which doesn't get manipulated or kind of people don't get taken for a ride by unscrupulous promoters. I think it can create larger companies which are well disciplined, because they will be disciplined to provide information to its investors from literally young age, right?
Wow, yeah.
When they get listed, and that's where I think I have a lot of hope on right companies coming, taking money from public, but more importantly, it's a different way of capitalism.
Ashish, it's been pretty obvious and pretty clear by now that the market works on logic, market works on a lot of rationality, and I'm sure there is no scope for any superstition, right? Taking advantage of your availability today for this interview, there is a superstition, कह लो या एक rumor कह लो, that the BSc ka gate number 2 is haunted, or there is something not something is yet to be fixed in a way. But yes, haunted is the what word used. Ashish, you have who, if not you, who can answer this better? Is it true?
No, in a way, see, there are many answers. In cricket, when I used to run cricket team also called Mumbai Indians,
Yes.
I side up. But in cricket, it's a Nelson, you know, double Nelson,
Yes, I
triple
remember.
Nelson. So
Yeah.
it's like 111 number, 111 number, or 222 या 333, like that number is superstition कि वहाँ पर wicket जानी ही जानी है. People, all commentators try to comment. You just look whenever that number is reached. Imagine Sachin Tendulkar is batting at 111, and he is having back of his mind that I'm going to get out. Whatever I do, he is going to lose his wicket, right? Sachin will never think that way, because he has a confidence in his skills, right? And that's how it is possible that sometimes wickets go on that number, but then wickets go on 112 also, wickets go on 313 also, right? Why? Because it's a unique number you can also remember. You can remember. So that's why when in this gate 2 had a basically bull, we call bull gate. Okay, it's on the main road.
Yes.
It's not actually Dalal Street. It's actually called Mumbai Samachar Marg. Okay, and so BSE has 2 gates. There is third gate which is never opened, but it has 2 gates. That gate is on the Mumbai Samachar. It opens on Mumbai Samachar Marg, and the bull was established before I joined BSE, but then quirk of fate, whatever, the markets probably fell. That is how the story goes. And then people don't want to give credence or credit to the factors which brought the market down. Instead, they said that bull is
Okay.
not correctly placed, or bull should not be placed at all in an exchange.
Okay.
And so when I joined BSE, lots of people will come to me, even on the road or quietly in the lift, saying, "Sir, but that is on. You need to change that. Otherwise, markets will never go up."
Oh.
And I said, when it's not the fault of the bull, right?
Yeah.
It's the fault in our thinking, that we are trying to ascribe all good things that happens due to us, but bad things is because of bull. And that time market was probably 7,000-8,000 I mean, somewhere some reasonable number. But after that, the market started going up, and now it's 72,000 in Sensex terms, right? And so, if that was
That was the case.
problematic, why would market go up, right? So, for me, this is basically, I think, in some ways, people want to believe. Like today, also, I see these astrologers also predicting nifty numbers and all. People want to believe now there is a market for that. If you look at newspapers, many people go to that page where today's sort of Rashi Fal is there, you know, and they say mean Rashi, that is Pisces, will travel. You mean to say 1/12 of the entire world will start traveling?
Not
And
really,
will they
yeah.
get seat in the train?
Yeah.
But it's good to, and sometimes I used to be friends with some of these
Okay.
newspaper editors and all, and they used to tell me funny stories about this Bejan Daru wala. Sometimes that guy used to forget sending for tomorrow's future. So you can't predict. I mean, you can't print
Yeah,
it. So
print
they
it.
used to take out some
Purana.
Purana one and print it,
People
right?
will
And
read
people
it.
will still read and believe. So
That's
if
so.
you want to believe, you will believe.
Right.
But finally, the stock markets work on the basic fundamentals of
Yeah.
the economy, of the company, and of course the world.
Right.
And if sometimes they go down because of something not happening correctly or some imbalance is getting created. But if you are good, you will be able to predict by studying and not being so superstitious.
Superb. No, thanks for that myth buster. And yes, you are absolutely spot on. Markets work on logic. Superstition की इसमें जगह नहीं है. Uh, I am coming to the last question of this interview, Ashish. 1800s early, BSc took its first shape under a banyan tree. And as the research says that a cotton merchant, Premchand Roy Chand, was instrumental in keeping the nave of the capital markets, like assuming for that matter. Is there any lineage from that family that still is connected to the markets, the very family or the very person?
Yeah, of course. I think at least one person I know. I met him in early 90s. He used to be very much a stockbroker in India, but then he migrated to. He is probably great grandson of Mr. Premchand Roychand. Probably migrated to Switzerland. So recently, uh, there was a news around 8-10 years back that Rajabai Tower, which is a Bombay University or University of Mumbai's main hall, and there is a tower. It was donated by Premchand Roychand in 1866, before BSc was made in 1875.
Right.
And so that had to be renovated, and his family from Switzerland paid for that. And so he had come, and then he met me at BSc. That time I was in BSc. And he met me, and we had exchange of pleasantries, and of course we took photographs and all. And so there is a family connect yet going on, and they are very proud of their
Wow.
connection to that part of Bombay or Mumbai, where literally the Rajabai Tower stands tall. And there is a story of Rajabai Tower that in 1866, Premchand Roychand was so rich, he gave this tower. But his mother, they used to stay close by, and his mother could not see far because she was old, and spectacles were not that prevalent. And so that bell was rung every 15 minutes. It was designed to ring every 15 minutes, and still that bell rings every 15 minutes even now.
Oh.
Right? So those are the kind of small little tidbits, but in some ways the stockbrokers were either rich people or they became rich after being there in the markets, and they have done lots of charitable work across Mumbai, but across India.
Right.
Like I come from a city called Ahmedabad, and when I was a child, I used to go to a library called it's a municipal library called Maneklal Jethalal Library, and then by quirk of fate, I started working in stock markets, and I became CEO of BSc. And some day, two young boys came, and we were chatting up, and I said I used to go and study in that library as a child. And they said, no, but that library was donated by my great grandfather. And so the brokers of those days were intimately involved in the society. They have done lots of charitable work, and probably today also many of them are doing, which we are not aware
of.
right? So that's how I see that. Overall, Indian businesses have always been very sort of connected to their surroundings, and they have been doing a lot of charity, which now, of course, we have created a CSR clause in the Companies Act. There is no country in the world which has CSR clause where 2% of profits of a large company have to go towards CSR. So, in a way, Indian business have been very charitable.
Ashish, thank you so much for spending this time and such an insightful conversation. I have a lot of takeaways for sure, and I'm sure the audience will be having a lot to take down as notes. I think I find this conversation very holistic, very meaningful, and different. I hope you felt the same way with this discussion, Ashish.
No, thank you, ma'am, for this opportunity.
Thank
we are
you.
delighted to share whatever we can think of.
Lovely. Thank you for enriching this. Thank you so much.